Nearly half of Americans fear they'll run out of money in retirement, and with longer lifespans, that fear is real. But what if you could guarantee paychecks for life no matter what the market does? In this lesson, I'm revealing the secret strategy that smart retirees use to create lifetime income with zero market risk. Let's dive into SafeFlow Income, your personal pension plan for a financially relaxed retirement. If it's your first time here, welcome. I'm Dr. Amanda, and this is the Retirement Income School, the education that you've never got in school that you wish you had, that teaches you how to protect your wealth and generate guaranteed income so you can retire with peace of mind. In this lesson, I'm breaking down Solution 2 from the Guaranteed Income Blueprint, which is a safe money system to turn your assets into lifetime income. In the last video, we talked about the Smart Life Plan, where you are learning to create retirement income using whole life insurance. If you haven't listened to or watched that yet, be sure to go back and do it. We're focusing in this lesson on SafeFlow Income, which is how to turn your retirement assets into income using fixed index annuities. And in the next lesson, we will cover LTC Expense Shield, which is a way to shield your assets from medical expenses as you age using long-term care protection. And let's start by talking about SafeFlow Income, which is how you're going to create lifetime retirement income with annuities. Now, we're going to cover the number one retirement fear, and 50% of Americans worry about this. We're going to talk about how annuities are your way to create peace of mind because they're your solution to this problem. And that way you can enjoy certainty about your income and see why smart retirees use this strategy to enjoy retirement. So let's start with the number one retirement fear. I wonder if you can guess what it is. What's the number one retirement fear? Running out of money. So nearly half of US adults are concerned they won't have enough money to retire comfortably. When I sit with groups of people and we talk about retirement, when I ask them, what's your number one retirement fear? This is what comes up over and over again. And obviously a Gallup poll shows this as well. And the reason is because we have longevity increases and there's a lack of planning. So the reality is that we're living longer. Life expectancy at age 65 is 83.4 for men and 86 for women. And about 52% of Americans say they haven't calculated how much money they need to retire. And even if you have calculated how much money you need to retire, you still might not know how to be sure that you have guaranteed lifetime income. This is a tricky part of retirement planning. It was telling when I went to a retirement conference recently, and it was filled with financial planners who were wanting to learn more about retirement income specifically because they talked about how it's one of the most complex parts of financial planning because there are so many different things to consider. With this longevity risk, we don't have a crystal ball to know how long we're going to live. And this causes us to have a lot of fears in retirement because we don't know how to enjoy it because we're not sure how much money we need or how long we need the money that we have to last. And so there is a problem of living too long. Like I said, with a life expectancy at age 65 being 83.4 for men and 86 for women, we are living much longer. And what that means is that our funds need to stretch much farther than they used to. This causes a withdrawal dilemma. So if you take too much from your savings, you might run out completely. That's a very scary feeling, not knowing if you're going to run out of money in retirement. Who's going to take care of you? Will you be a burden on your family? Will you have to eat beans and rice to survive? No one wants that. And no matter how much money you have saved up, no matter what your net worth is, this is still a fear for people because we tend to have our expenses rise to meet our income. So we've gotten used to a certain lifestyle and we want to maintain that lifestyle and we don't want to be a burden to anybody in our lives. And on the flip flip side, there's a conservation trap. What if you take too little and you live in voluntary poverty despite having money? So I see this a lot with people who are freaked out about, I don't know how long I'm going to live. I don't know how much I need to have. Even though I have a high net worth and I have a lot of assets, I'm afraid to spend. And so they don't enjoy their retirement. And we don't want that. The solution is that you need an income strategy that lasts as long as you do. This is where annuities come to the rescue. What is an annuity? An annuity is a financial product that turns your savings into guaranteed income for life. It's like Social Security, and annuities are products that are sold by insurance companies. You pay into it like you did with Social Security, and in return, it pays you a steady monthly check that you can't outlive. Now, that's when it's structured in a certain way. There are various types of annuities, but I'm going to be focusing on lifetime income annuities because when we're talking about retirement planning, that is the solution for making sure that you have a lifetime paycheck. There are other variations of annuities that I'll cover in other lessons, but today we're focusing on the lifetime income annuities. What these give you is financial protection. Wall Street Journal says annuities are like airbags for your retirement. So they're creating safety, right? It's a personal pension. So I want you to think of them as your own pension. They're safe and guaranteed, a constant flow of predictable income. And because an annuity is a contract with an insurance company, you're going to know exactly how much you'll receive each month. You're always going to know the bottom line, and that way you can relax in retirement. So if annuities sound great to you, you might be wondering, well, why doesn't everyone have one? And the reason is that there are a lot of myths out there about annuities. Just like any financial product or service, you can go online and search and find good and bad things about pretty much all of them. And again, this is where education comes in. That's why I created the Retirement Income School, to educate you so that you can learn and understand, talk with me about it so that you know exactly what you're getting yourself into. You know the benefits and drawbacks. And there are benefits and drawbacks to every financial product. The thing is that you want to find the right solution for the right goal. So an annuity might not be a good fit for everybody, but for lifetime income, it is an awesome fit. And in terms of the myths, you want to understand why people are saying this. So here are the top 5 myths. The first one I hear is annuities are too expensive. And the truth is that many fixed and fixed index annuities have 0 annual fees. And if there is a fee on an annuity, it's because it's offering a win-win benefit like an income rider or inflation protection. And so, no, an insurance company is not a charity organization or a nonprofit. They are going to charge a fee for certain things, but the benefit far outweighs the fee. And I'm always surprised when most people will say this, annuities are so expensive, and then I ask them, what are your fees in your 401k? They have no idea. No clue. What are the fees that your financial advisor charges you to manage your portfolio? They don't really know. What are your mutual fund fees? People don't know. And so they just replicate this story of annuities are too expensive, but they don't even know how much the annuity fees are, or that a lot of them have no fees. So if you hear yourself saying this, then you might want to actually look into the fees you're currently being charged in other investment opportunities or other policies or contractual guarantees that you have. Something that's really amazing about annuities is that they are a contractual guarantee, so the fees are very transparent and you will know upfront what they are versus them being hidden and unclear as in other retirement accounts. Some people fear that I will lose control of my money. And the truth is that you're choosing safety. You're not surrendering control. Most annuities offer liquidity features and beneficiary protections, and definitely the ones that I use for my clients offer these features. So you're not losing control of your money. You're deciding to control your money in a very specific way that is benefiting you the most in a solution that makes sense for your specific situation. So you don't lose control of your money. I would even argue that you lose control of your money when you don't know how much you have for retirement income. Then you feel very out of control. So they actually give you a lot of control. Some people fear that annuities don't grow, and the truth is that fixed index annuities offer market-linked growth potential without the risk of market loss. So the beautiful thing here is that you have a zero cap at the base, so you can't lose money. So if you have a fixed index annuity, you can participate in market gain without any loss, which is very different than many other asset classes that you might be investing in, where you don't have those protective factors in place. Another myth is that they're only for old people, and the truth is that they're perfect for anyone seeking tax-deferred growth and guaranteed future income regardless of age. There are 40-year-olds who set up accumulation-based annuities, and then they roll them into an income annuity when they're ready to turn on the income. So there are a lot of options here. They're not only for older people. What I think is that they're for people who are really interested in security in retirement, they're interested in asset protection, and they're interested in guarantees. So like I said, annuities aren't for everybody. If you're a risk taker and you're looking for double-digit, huge gains and you're not worried about the losses, then an annuity is probably not for you. But if you're somebody who says, I would love to know that I have a guaranteed lifetime paycheck that I will never outlive, and that sounds like heaven to me, then an annuity is something that you would want to explore. Another myth is that insurance companies keep my money. So remember I said annuities are insurance-based products, and in days of old, there were annuity products where if you passed and the cash value hadn't been used in your policy, the insurance company would take it. Those are very rare these days, and I would never set one of my clients up with these. So the truth is that they let you name beneficiaries, and your money goes to loved ones, not the insurance company. So when you pass, if there's still value left in your policy, then it will pass on to your beneficiaries. So let's talk about why financial experts trust annuities. So I believe that financial security translates to happiness, and studies show that retirees with lifetime income from annuities feel more secure and report greater life satisfaction. If you think about this for yourself, if you knew that you had a guaranteed lifetime paycheck coming in every month without fail, no matter how long you live, how much happier are you in retirement knowing that you have that baseline met? So this is a safe money solution where you have the foundation of your money. If we want to think about it like a pyramid, you have the foundation built. It's solid, it's strong, it's safe, it's certain. And people who have that in place feel much more secure in retirement, and their satisfaction is reported to be much higher. This is why 88% of advisors recommend annuities to clients nearing or in retirement age. And they suggest that 40% of your portfolio be allocated to an annuity because it guarantees lifetime income. And this creates high satisfaction rates. 80% of annuity owners said having guaranteed lifetime income made them feel more confident and secure in retirement. So in this lesson, I'm focusing on annuities with lifetime income riders. I call this SafeFlow Income, and that's because it's giving you a constant stream of safe income. How these work is that you have accumulated savings, and this could be in your retirement funds, in a qualified plan, could be in a bank account, could be inheritance, and this serves as the foundation for creating your lifetime income. This principle is zero market risk, so it's protected against market downturns. You're not going to put money into the annuity and lose any money, so there's zero market risk, and it's going to give you a paycheck for life. So it's like a personalized pension that gives you regular payments that never stop no matter how long you live. There are fixed and indexed annuities. So a fixed annuity is going to give you a declared rate, zero risk, and this is ideal for people who want 100% certainty and they know the exact amount right away when they decide to sign the contract for their annuity. With a fixed index annuity, it's market linked and there's a floor of zero, like I said earlier. So you could gain in your annuity. So while your annuity is sitting there accumulating before you turn on the income stream, you could be growing the value of the annuity because it's linked to the market. But let's say the market tanks and goes way down, well, you have a floor of zero, so you're never going to lose. So you have growth potential without losses. And in both fixed and index annuities, there is no risk. The fixed annuity just offers a guaranteed amount on the day that you sign the contract. The fixed index annuity offers a guaranteed amount and then hypothetical amounts based on the growth until you turn on the income. Now, this is a good time to talk about variable annuities. I do not sell variable annuities because they're not a safe money solution. And the reason is because they're risky. They go up and down with the market and your principal isn't protected. So when you purchase a variable annuity, you don't know the amount you're going to get because it's not a guaranteed income contractually. And they're more expensive. They have higher fees that eat at your returns. Sometimes those fees are 3 to 4% annually. And they're uncertain. There's no guaranteed growth and the income isn't always reliable. So if you have a variable annuity and that works for you, that's great. I just don't have a license to lose your money. So I focus on guaranteed safe money solutions. So for an income-based product, I want to make sure that you know that you have safe, certain guarantees. So if you're looking for a variable annuity, I'm not the right person to talk to. Another consideration for annuities is the income timelines. So there are both immediate and deferred annuities. With an immediate annuity, the income starts within 30 days. So you could take a lump sum or a bonus or an inheritance and you could put it into an annuity and then turn on income within 30 days. If you have a deferred annuity, then the income starts later. So this is very ideal for people planning retirement 1 to 20 years out. You want to start thinking, okay, when would I want a deferred annuity versus an immediate? And those are some different scenarios based on your particular situation. The way that you fund your retirement paycheck is that you can either do a lump sum. So you can convert a single large payment into lifetime income. So that'd be a lump sum annuity. Sometimes this is great for people who get a big inheritance or they sell a property or they get a big payout. Could be a lottery winner. It'd be amazing actually if lottery winners did this because then they wouldn't lose all of the lottery winnings and instead they would have created for themselves lifetime income, which would have been really smart because we know statistically that most lottery winners end up worse off after winning the lottery. But that's a sidetrack. Another way to fund your retirement paycheck is flexible payments. So you can do lump sum, flexible payments. You add money on your schedule as your situation allows. This is often for accumulation-based annuities. And you could do a tax-free rollover. So you could transfer IRA or 401k funds without any penalties. So it's like in a property where you do a 1031 exchange. Similarly, you can do this with annuities. It's called a 1035 exchange. So you could exchange IRA money into an annuity without any tax penalties. And so you turn your IRA into a lifetime income stream by doing a 1035 exchange. An awesome feature of an annuity is that there are no advisor fees, so 100% of your money goes to work. So for me, let's say that we were to work together and I find you an annuity, I have software, and during a meeting, I show you all of the different options that fit your needs, and I come up with the right solution for you. We apply, and then when you're approved, the company pays me. So I'm contracted with this insurance company and they pay me to find you as a client. And so the advisor fees aren't coming out of your pocket. They are being paid to me by the insurance company because I'm an insurance agent. So some custom annuity features. There are joint survivor options. These protect your spouse with continued income after your passing. So let's say you own an annuity and you want a joint survivor option and you pass away. Well, your spouse can just keep getting the same income after you pass. There are long-term care doublers. Remember in the last lesson when I was talking about the Smart Life plan, I told you that you could get a LTC rider or a long-term care rider on your insurance policy so that you could use the policy for long-term care needs. Annuities have options that are called doublers. So they double your income if you need nursing care. So let's say that you've got your annuity payout going and you're retired and you're traveling and relaxing, and then all of a sudden something comes up where you need long-term care. You qualify for that long-term care through medical examinations, and then they'll double your income for your long-term care needs. So it's a really great way to have your annuity act as a hybrid option for long-term care. They also offer inflation protection. So you could customize your annuity to have inflation protection, which helps you maintain purchasing power as costs rise over time. And then there are also beneficiary payout options. So any unused principal transfers to your heirs. An example would be, let's say that you got a big inheritance and you put $500,000 into your annuity and you turn on the income and you start getting a monthly payout from this annuity and life is rolling along, and then something happens to you and not all of that principal has been paid to you in your lifetime income. So you have an amount left in your policy. Let's say it's $400,000. That's going to get paid to whoever you choose as your beneficiary. So you don't lose the money that you put into the annuity. The other way this works, let's use the same example, but a different scenario. So let's say you got a $500,000 inheritance and you put it into an annuity and you start getting paid and you end up living 30 more years. Clearly, they have paid you more than $500,000, but because it's a lifetime guaranteed income contract, they will pay you every month until you pass away, even if it's $2 million. So you put in $500,000, they paid you $2 million, and then you pass. Now, in that case, there's not going to be any money left to give to your beneficiary. But look how much you benefited from having that security and that certainty for your entire life. And it helps remove that risk of longevity because we don't know how long we're going to live. Some people might pass earlier than they expect, and some people might pass a lot later than they expect. So that's the beauty of annuities, is that you don't need to worry about your lifetime income if you live too long, meaning your money doesn't last as long as you live. Annuities take care of that problem. Let me add here, I had a client recently say to me, I had a friend who had an annuity and it turned off and it didn't cover them. And I said, you've got to understand this is a contractual guarantee. There are term certain annuities, there are period certain annuities. So that person must have had an annuity that didn't last their lifetime, which is why for retirement income, I like to do lifetime income annuities. But each case is unique. And this is why you want to talk to somebody who knows what the benefits and features are of different types of annuities. So why would you want a SafeFlow income annuity versus, let's say, a traditional retirement plan? With traditional retirement plans, you are at risk for market exposure, you have uncertain income, there's withdrawal risk, and there's typically much more complex management. So let's say that you have a 401k and you're just taking out annual withdrawals. How do you know how much to withdraw? You know, you've heard about the 4% safe withdrawal strategy. That's not true for everybody. What if the market tanks and your 401k loses value and all of a sudden 4% isn't going to work anymore for you? Now you've got to adjust your lifestyle and you've got this complex management because you don't know what to expect. With a SafeFlow income annuity, you're going to have zero market risk, guaranteed paychecks for life. It's simple and automatic. Once you turn the income on, it goes straight into your checking account, just like Social Security does. So every month it's going into your account until you pass away. What an incredible pension plan. And you can enjoy your life. You can enjoy your retirement because you're not worried about market exposure and that uncertainty in your income. So this is how SafeFlow Income solves the biggest retirement risks. Remember, we talked about longevity risk. This is guaranteed income for life. You're never going to outlive your money with a lifetime income annuity. It protects you against market volatility. So your principal is protected with contractual guarantees. There's no need to worry about market loss. You've got withdrawal rate risk protection. Like I said, you've got structured payouts that prevent overspending and running out. You know your income between, let's say you've got your Social Security payout, maybe you have a pension from somewhere that you worked and you have this annuity. Now you know your baseline for every single month and you're never going to overspend or run out because you know exactly what to expect. Protects you against inflation risk. So there are optional income increases to help your money keep pace. So like I said, you can add an inflation rider onto your annuity and it'll protect you from inflation risk. And then there are also long-term care benefits. This will give you boosted income. Remember that income doubler if you need care, and it won't drain your savings. So let's recap SafeFlow Income. You're going to get peace of mind and sleep well knowing that your income is guaranteed. It gives you protection, zero market risk with guaranteed growth. You've got predictable income with regular paychecks to last as long as you live. And there's personalization. You can customize your annuity to your unique retirement needs. So what's next? I want you to be sure that you watch the next lesson in the Guaranteed Income Blueprint series. The first solution was the Smart Life plan using whole life insurance. In this lesson, we talked about SafeFlow Income using fixed index annuities with lifetime income riders. And in the final video, I'm going to cover the LTC expense shield, which is how you're going to shield your assets from rising medical expenses by planning ahead for long-term care protection. If you're ready to build your guaranteed income blueprint, then schedule a retirement income Q&A call with me by going to retirementincome.school, and you will see a button at the top of the page. We'll have a chat and we will customize a plan that's unique to you based on your particular retirement income situation. And if you haven't yet, be sure to subscribe to the Retirement Income School so that you can get weekly lessons delivered directly to your feed. Thanks for attending another great class at the Retirement Income School, where you're learning how to keep your money safe and make it last so you can enjoy your retirement. This content is for educational purposes only and is not financial, legal, or tax advice. Always consult a qualified professional before making decisions about your retirement.